For more on the markets and the financial sector, I want to bring in Bob Diamond, CEO of Atlas Merchant Capital, former CEO of Barclays, and our guru on all things Fed and finance these days. What would you do?
I think the Fed, listen, they waited too long. We know that. So we had raging inflation a year ago. I mean, I think it's about a year ago they began the rate rises, and it's now 4.5% to 4.75% in a year. And I think the Fed is reasonably pleased. My sense is we have, maybe 25 to 75 basis points to go, somewhere in that area, and then they'll pause and keep an eye on it. And I think inflation has peaked. It's definitely started to turn.
But turn to what, turn to what, 5%, to 3%, to 2, getting to 2% is going to be a project.
I don't think, if the Fed sees inflation in the 3 to 3.5% range, Andrew, I think they'll be cautious. They're not going to slam the brakes and say it has to get under 2%. So, I think we've seen the worst in terms of, the economic correction. I think 2023 is still going to be very challenging. The economy hasn't totally adjusted to 4.5%, 5% interest rates. But I do think that this is, the economy is still growing. And
the real economy of the markets, because you could say that the stock market is looking out, hopefully, 12, 18 months from now.
Yeah.
I can make an argument about that. Today, though, you talk to people in the shipping business even. They say, look, there's not nearly as many boxes coming off
any of the rate sensitive.
You know what I'm saying?
We wanted the economy to slow down. We needed to get interest rates up. I mean, was it a normal world for 14 years of zero interest rates? I mean, that was in essence, to feed the monster here. It was the public sector excess of zero interest rates for 14 years creates bad decisions. Right. And it also is a stimulus that we have to pay back for.
It's been really bad to get you to that point to say that. Wow, unbelievable.
But this is much more normal. You have a 10-year at 4%. There was 10 years leading up into COVID where it was between 1.5 and 3. A dip below 1.5 during the worst of COVID. But I think a more normalized interest rate environment, a little bit of volatility, a steeper curve, these things are all very, very positive for the economy in the medium to long term. Obviously, it's an adjustment right now.
But, Bob, every risk manager I know, they're not saying it's certainly happening, that we're going into some tailspin or some big downturn. But every risk manager I know who's lived through a lot of these things is taking precautions at this point. You've got Steve Schwarzman telling his companies to be your own bank. Don't need money for the next 18 to 24 months. Yeah. For 6 months, we've been hearing this from Jamie Dimon and other folks.
Well, what's wrong with that?
Yeah, but we don't know if it's likely to happen, but the odds are higher than that.
I mean, my sense is, the most recent one I lived through is post the financial crisis in 2009. It was like really deep, really dark, and fairly short, as it turned out. I don't think this is going to be deep and dark. I think we're seeing an economic correction. It's going to continue. One of the things we do like at Atlas Merchant Capital is the distress business, which we started about 3 years ago. There's going to be some great opportunities in corporate stress because of bad decisions that were made, in such a long period of zero interest rates. But looking at the economy, I think this is going to be longer in terms of a correction, but much more mild than I think what the worst we're anticipating.
Would you rather have zero? I mean, zero inflation is definitely overrated. Nobody likes that. We saw that in.
Listen, we were hearing for 10 or 15 years the best thing that could happen is a little whiff of inflation. We got more than a little whiff.
How about people that have to have some fixed income or defined benefit plans or insurance companies or people that are retired living on fixed income? I mean, if you're at 3%, so what do they get? I mean, that's not an exorbitant yield you're going to see on the even on the long end. It's not the end of the world.
No, and I think this environment is. I actually think, as we said earlier, the Fed waited too long, and they helped probably raise inflation higher than we had wanted. But I've got to believe they're feeling reasonably good right now that they've got this thing back in a more normalized position. And I think from an economic point of view, the economy is not collapsing. And somewhat higher interest rates are pretty normal and good.